100x. Yes, today I'm going to show you how to increase the probability of you hitting a 100x. Remembering, we only do probabilities and never certainties. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008. Normally focused on trading currencies, but now exclusive on cryptocurrencies. So let's dive straight in. Staking. Yes, staking is the secret. Here's the math. If you can double the amount of tokens you own for free, you only need a 50x to get 100x. If you can double the amount of tokens you own for free, you only need a 50x to get 100x. Because we're looking at the math and the business model and your strategy. So staking is a big deal in crypto, and you need to understand the power of it and why it exists. So first of all, what the heck is staking? The way I like to think about staking, it's a special cryptocurrency bank account that pays high interest rates. It's a special interest rate bank account sitting on the blockchain, totally decentralized, and it pays very high yields, high interest rates, right? It pays high APR or APY if you're compounding. Now, these projects that are giving high rewards are not charities. They're not trying to do you a favor. They are sophisticated businesses with incentivization to drive behavior. There's a great quote: show me the reward, I will show you the behavior, or show me the incentive and I will show you the behavior. Now, when Satoshi created Bitcoin and the protocol of Bitcoin, proof of work, it's all about game theory, incentivizing the right behavior to keep the whole protocol trustworthy, right? Proof of work. The miners are incentivized to perform a certain way. Everyone else is incentivized to perform a certain way. So it creates a really nice ecosystem that's robust. So when it comes to staking, that's what these protocols are looking for. So a lot of the time with like decentralized exchanges in particular, what they need from us, from you, is liquidity, right? Liquidity. Because decentralized exchanges is like a big stock exchange that needs to have literally the free flow of money, right? So it's instant transactions or fast transactions with the lowest possible cost for a great user experience. But for the company themselves to put in tens of millions, hundreds of millions, and billions of liquidity to provide this is very difficult to raise that level of funds. So what they do is say, hey, I want you as a business partner. Yeah, directly on the decentralized exchange, every time there's a transaction fee, we're just going to give you a percentage depending on how many tokens you've staked. That's it. Yeah. So they want you and need you for staking for different reasons. They're not a charity. They're not giving away tokens for free. It's all built into their tokenomics. Economics for tokens is tokenomics. And it's all game theory. Show me the incentive and I'll show you the behavior. And they want to drive the right behavior for different projects. So one of the examples I'm going to use, one of my favorite projects at the moment, is, you probably know what it is. Yeah. Can you guess? Yeah. It's from the Bluezilla ecosystem. They're a venture capital firm. They incubate a lot of projects, but this one they listed in, I think it was July or August. It's Crossswap, right? Crossswap. But Crossswap have a staking feature. And I read all your comments on YouTube, or I do my best to. Sometimes YouTube deletes them, and I do my best to reply to everything. But I realized that a lot of people don't understand staking or the basic functionality of staking. So I just like to keep it simple English to say, look, it's a special bank account on the blockchain which wants to pay you high APY and APR. APR means without the compounding, APY with the compounding. So I believe in Crossswap. I think they're going to do brilliant things, and they haven't even launched their main project yet. So what I'm aiming to do is just to accumulate as much Crossswap as I can. So when they do launch their main DEX, I'm going to show you some of the stuff on their roadmap. It's like right now then, to increase the probability of getting 100x or more, or it's all about just accumulating more tokens for free. So you'll see in the top right hand corner over here, if I pull up the laser so I can show you on my screen what I'm looking at. If I pull this up here, is this APY is changed daily. So they charge a sales tax, I believe it's 5%. Anytime you sell your cross swap tokens, they charge 5% taxation. It's like a taxation. And so you have to set your slippage to above 5 when you're performing a sale of cross swap on pancake swap. But a lot of those, I don't know if it's 100% of them, but a percentage of them go to the stakers. And that's what this APY is. So the more people that sell their token on CrossSwap in a single day, this APY goes up. And it's been as high as 670% and as low as 56% from what I've seen. I don't check it every day, but that's what I've seen. But the average is around 200, 300% APY. But I got the math for you for the month. So it's been approximately just under 20%. But let's just use 20% as the example. For the month, you would have, if you just staked your tokens literally a month ago, around October 20th to November 20th, you got an extra 20% tokens for free for just holding it in that special bank account, paying you interest. Make sense? Hopefully that makes sense. You're just getting free tokens. But they're not a charity. They're a sophisticated business model. They need to make a profit. Profit is a catalyst to fulfill a company's vision. Yeah, profit is required as a catalyst to fulfill the company's vision and the mission, and it keeps growing. It's like a child. It needs food, it needs to grow, it needs hormones, it needs to grow and develop, and then it can do great things in the world as it grows and it matures and it discovers new things. Projects are the same. I like to think of them as little children or little seeds that are going to grow to do beautiful things in the world, but they need oxygen, they need food, and their food is profit. So the tokenomics is designed in a way, and it's very sophisticated. But I'm saying this like this because a lot of people kind of ask the question. I've seen it on comments like, hey, and they used, I even hate the word when people say it, it looks like a SCAM. And I'm like, how can you even say that? They're like, how can they pay 600% APY? And I'm like, have you read their tokenomics? Have you looked at their website? Have you kind of looked at what they're doing here and why they're doing it and how they're doing it and their track record? So an example is this, right? Let's just say you bought $10,000 worth of CrossSwap. Now, when I first brought this to the table, I did a video on it. I think it was over a month. Yeah, I think 6 weeks ago. It was under 20 cents. It was around 15 cents, 13 cents. But let's just say you got in at 20 cents and you bought $10,000 worth of tokens. That means you would have got 50,000 tokens, right? $10,000 at 20 cents per token gives you 50,000 tokens. 20% extra tokens in the month means that you're getting an extra 10,000 tokens as staking rewards just by saying, hey, I'm going to put it in this bank account, right? And with CrossSwap, every different staking account has a different rule set, different code, different protocol. Now, if you click on unstake, it will explain to you there's a 7-day holding period. So when you want to take out your tokens, there's 7 days holding, and then you can withdraw, right? That's important to note as well when you're planning your whole business strategy. But I'm using CrossSwap as the example, but it applies to many cryptocurrencies, outside of the Bluezilla ecosystem also. So you're always looking for, how can I maximize the probability? Because we can't do certainties, but we can do probabilities. How can we maximize the probability of getting 100x or whatever your goal is? It might be a 10x, it might be a 5x, it might be a 20x, it might be a 50x, it might be a 1000x, right? Whatever it is, well, if you're getting more tokens for free, that's going to increase the probability of you getting the result that you want in terms of just return on investment. But a couple of things here, right? So I'm going to keep it really simple, really short today, just kind of going, right, I've got extra 10,000 tokens. But now let's just say the price of CrossSwap went up to $1. And it did tag $1. It's currently around 50, 60, 70 cents, thereabouts, as of, what's today? Today's the 20th of November. So it's around, let's just say it gets to $1. That means your extra 10,000 tokens is technically worth $10,000. And you could sell that, and that will cover your cost of buying the tokens in the first place, and you're risk-free, right? So that's not, to double the chances of getting your 100x, but it is a strategy that you could use to get risk-free. You can say, hey, if I just get enough tokens from my rewards, and when they equal the amount that I purchased, sell them on the open market, on the secondary market, pancake swap, sell them, get your money back in your pocket, you're risk-free. That's a good strategy. Or if you then restake them, right? So if you just wait to the end of the month and restaked it once, restaked it at the end of the month, it will mean on the second month, you'll get 12,000 tokens. You go, how do you work that one out, Jagier? Well, 50,000 tokens plus 10,000 is 60,000. 20% of 60,000 is 12,000. So you get extra 12,000 tokens. So you have 72,000 tokens after the next month. If you did it again and again, you would officially have over double the amount of tokens. You'll have 100,000 tokens, right? If you staked, if it maintains at 20%, could go higher, could go lower. But if it maintained at 20% per month, if you compounded that once a month at the end of the month 4 times, I'm not saying that's what you should do, but if you did, you would literally double the tokens. So now, rather than the price having to do a 100x, like 20 cents to $20 is 100x, now it only has to go from 20 cents to $10 to get your 100x because you got double the amount of tokens. So when you do the math, it works out the same thing. Or if you did end up getting the $20 token appreciation price, but now you got double the amount of tokens, so you'll get a 200x. Hopefully that's making sense. I'm going to pull out a calculator in a second. But what I also like to do is I like to look at, right, has the main event happened yet? Is there something to come that we haven't seen yet? So the Crossswap, and I'll do this with all projects, right? But I'm just using Crossswap as an example. When I look at their roadmap, what I look at is I go, what have they done on this part? They got Q1 of 2022, Q2 of 2022, and they're going to update it and so on and so forth, as far as I'm aware. But when I'm looking at this, they go strategic investors, a public IDO. We go, yep, they've done that. Listing on Uniswap, yep, they've done that. Version 1 of their DEX, well, they haven't released that yet, right? That's a big deal. That's like saying we're going to release our competitor to PancakeSwap, right? They haven't done that yet. Liquidity mining, that's the same as yield farming, the LP tokens, right? They haven't done that. But they have released staking, so the staking is available right now. So we know that, that's done. Cross-chain bridge, Ethereum to Binance Smart Chain. So they've got that on their ecosystem, not Crossswap, but the Bluezilla team with their launch pads. But what they also haven't done is liquidity mining, yield farming, and staking incentives. Remember, show me the incentive and I'll show you the behavior. That's a really, really important thing to know, right? So we saw that with Wagyu Swap. As soon as they said, right, Wagyu is going live, we're going to launch the liquidity mining, which is the LP tokens, which is the yield farming, and the single staking tokens, which is the pools, the price just shut up. Why? Because people were incentivized to stake their tokens and get free tokens, in essence, with these high interest rate bank accounts on the blockchain called staking accounts or yield farming, right? So now you can kind of maybe hopefully do a bit more. It doesn't have to be sophisticated, but just basic math. We can go, okay, I can increase the probability of making my 100x. So before I jump out of this, what I wanted to do very quickly is, if I can jump out of this, I want to bring up a calculator. If I bring up a calculator, yeah, hopefully you can see this, right? So what I was going to do is this, just to show you the math, right? 50,000 times 1.2, that's the way you add 20%, 60,000, so that's 1 month, times 1.2, let's just say you recompound the whole amount, 72,000 tokens after 2 months of staking. If you achieve 20%, after 3 months is 86,400. And then we're going to do that one more time, times 1.2, and I think it goes over 100,000. Bang, double your tokens in roughly 4 months or just about. If you compound more frequently, then your rewards will be more frequent, and the rate at which you get to that point is faster as well. So there you have it, people. There you have it. Now you know how to increase the probability of you hitting a 100x using staking. If you hold the token and you're looking to hold for it for a project's mainnet to go live or whatever it is, and you're going to hold for 2 months, 3 months, 4 months, and they've got staking incentives and they're like 20% a month, if you kind of do the math, they go, hey, you have to be a bit silly not to take advantage of that. Especially the way I like to do it is this. Let's just say you've got a 3 exit strategy. Exit 1 is risk-free, exit 2 is profit, exit 3 is profit. So let's just say, for example, you buy $10,000 worth of tokens. If it does let's just use your 4x. If it does a 4x in terms of the value of the token goes up by 4x, you sell 25%, right? That means your money's back in your pocket, right? 25% of your tokens, bang, 4x. But whilst you're waiting for that 4x, what are you going to do with the other 75%? Right, with that 75%, you can just stake. You can just stake and go, right, that's going to give me my yield. That's going to give me my APY. It's going to give me extra roughly 20% per month as I'm waiting for my exit 1 to be activated. Once my exit 1 target is hit, I can now take my money, put it back in my pocket, maybe unstake another 25% for your exit 2 or whatever your strategy is, maybe a third of the remaining amount, which is going to be maybe a 10x or a 20x, whatever your target is, your business plan. You should have a business plan because we do probabilities, never certainties. Even when something has a 100x potential, the word is potential. So it doesn't mean it's going to hit. So you have to assume that it's not going to hit. So that's why we become risk-free. Because if there was guarantees, we would, put everything into it and just wait for that 100x because it's going to be guaranteed, but it's not. We just know it's highly probable, but you have to do the math. Right, so like, subscribe, hit the bell notification. Let me know if you're staking. Let me know if that made sense. Hopefully it did. We're going to do a quote. A quote. This is important. Very, very important quote today, so pay attention. You ready? All right. It does not matter how slowly you go as long as you do not stop. It does not matter how slowly you go as long as you do not stop. Confucius. A wise guy, right? Wise guy. Why did I choose that one today? Well, for 99% of the human population, the word staking doesn't mean anything. Doesn't mean anything. Yield farming doesn't mean anything. Lock your money up into a staking pool, into a yield farming account, doesn't mean anything. So, if you read an article on Google, watch a video on YouTube, if you want to do it and you don't know how to do it, we live in the information, my friends. So if you literally have the question in your mind and you put it into Google, 9.9 times out of 10, there'll be an article, a Medium post, the company itself will post, it'll be something that will just say, this is how it's done, right? So it does not matter how slowly you go as long as you do not stop. And before anyone knows anything, they know nothing, right? So I'm going to show you some breakdancing, and I need to get used to you removing this mouse. I do a screen recording. You see this mouse on my head, right? I keep forgetting to move it to the side. I will show you my breakdancing. Some of you said I'm a breakdancer. I used to be a breakdancer. I don't really do it that much. I got a few videos, and I will show you in my next video. I'm gonna give you B-boy Vandal. I'm gonna show you my head spins. I'll show you my head spins. I used to do head spins back in the day, but again, when I did head spins, right, I saw it as one of the most impossible things to do from a human physiology standpoint. I got a degree in sports science and mathematics, and I had this huge fascination with physiology. And when I came across breakdancing when I was 18 at uni, Martin Sikora, he introduced me to breakdancing, and I got hooked. And then I got into doing head spins, and I was just fascinated that you could spin on your head, the most impossible thing, but you could do it, right? But it was because it doesn't matter how slowly you go as long as you do not stop. And first I had to learn how to do a headstand, and I couldn't do a headstand. So I had to learn how to do a headstand, and then you had to learn how to do something called taps, and then you had to do some other things with core and strength and techniques, and then you can go into more advanced things and so on and so forth. But crypto is the same. Everything is difficult before it's easy. That's normal, right? So if you feel a bit silly when you hear some of these things, or you're just not getting it, that's okay, because it's outside of the box. It hasn't been covered in your consciousness before, your box of knowledge and language. That's okay. But the same was driving, right? There was the first time where someone said, right, this is the gear stick, this is the clutch, this is the accelerator, here's the indicators, these are mirrors, this is how you put the seatbelt on. Now you may take it for granted, right? If you've learned how to drive. No, not everyone has, but if you have, now it's second nature. So when it comes to staking, yield farming, APYs, you want to increase the probability, but it may require some learning, and it's okay not to know, because how could you know if no one's taught you before? So there you have it. There you have it. So like, subscribe, hit the bell notification. We are fast approaching 10,000 subscribers. Literally on April 19th this year, we was on 5, and it took us 3 months. 3 months to get to our first 1,000. And now it's just got this amazing traction. So I appreciate you being here with me, especially you guys that have been with me from the beginning, but we're only just getting started. We want to bring more value. And by the way, if you want to join my private Telegram group, I have a Fibonacci and Elliott Wave masterclass, which shows you how to read the markets like a pro, because it's all about psychology, fear, and greed. And if you end up buying one of my courses, which is at a huge discount, I think the price is going up next week, because my team has said it's too cheap for what it is. Like, okay, the price is going up next week. If you buy the course, you'll get an invite to my private Telegram, where you'll get exclusive access or premier access to all YouTube content. All right, have a great weekend. I'll see you soon.